Everyone is suddenly making money in IPOs. Every second WhatsApp message is about allotment. Every YouTube video is screaming easy listing gains. But here is the real question. Is this a healthy market expansion or the beginning of an IPO trap? Because the last time IPOs became easy money, retail investors were destroyed for years. So what exactly happened after July? After July, something's changed. IPO subscription numbers exploded. Grey market premiums jumped. Almost every IPO started listing in green. Retail confidence suddenly returned. So from dull markets, we moved straight to the IPO mania. But smart money never asks, are people making money? They always ask, why is money suddenly flowing here? So there can be two possible realities. The first case can be that this is a real market expansion. So earnings growth are genuine, economy is reviving, liquidity is returning, capital formation is happening, IPOs are finally reflecting the true value. And the second case can be that this is a hype cycle. So too much retail money is chasing the limited supply, valuations are stretched, operators are recycling capital, and exit liquidity is being prepared. So your entire financial future depends on which reality is true. Now, what does history tell us about the IPO manias? Let's rewind quickly. So, during the 2006 to 2008 IPO boom, the crash has wiped the retail investors. During the 2017 to 18 IPO boom, there was a mid-cap collapse. During the 2021 IPO boom, 70% of the IPOs are destroyed. So every IPO mania starts with easy listing, retail confidence, media celebration, and ends with wealth destruction, frozen capital, long recovery. History does not repeat exactly, but it rhymes violently. So what is different this time? This time, a few things are genuinely different. India's GDP is structurally stronger. Manufacturing and infra capex is real. Banking system is healthier. Corporate balance sheets are cleaner. Domestic SIP money is stable. Now this gives some justification for higher IPO activity. But here is the danger. Even strong economies crash when valuation discipline dies. So how will you know this is a trap? The IPO surge turns into a trap when promoters start exiting aggressively. IPOs with no profits get 50 to 80x valuations. Subscription is driven only by grey market. Retail puts emergency money into IPOs. Apply in everything becomes a common advice. So the day you hear risk नहीं है सब listing in दे रहे हैं, this is the exact day risk becomes maximum. So what a smart investor should do right now or can do right now? So smart investor rules in an IPO mania is you should only apply where business seems to be understandable, profit seems to be real, valuation is rational, and GMP is not the only reason. And you should ideally avoid where only growth story is the selling point, promoter stake is rapidly diluting, HNI leverage is driving subscription. So this is not a financial recommendation, but this is just my opinion. The goal is not हर IPO में apply करना है. The goal should be ideally सिर्फ सही IPO में apply करना है. So what is the final verdict? So the post July IPO surge is partly real expansion, partly it seems dangerous, retail euphoria. Meaning some people will make money, many people will get trapped. The market does not reward hope, it only rewards discipline. So if you want real IPO analysis, no hype, no paid optimism, no telegram pump nonsense, subscribe to Insider Monk because here we don't chase IPOs, we survive them and compound beyond them. Thank you.